In this video, we'll be going over the IRS Interactive Tax Assistant tool that helps taxpayers determine whether or not payments they receive for being unemployed are taxable. So you don't need much information, you just need to understand the type of program from which you receive payments. And the Tax Assistant tool estimates that it should take about 10 minutes, so let's begin. So we're going to select the most recent tax year available, which is 2023, and we're going to start answering questions. So the first question, which type of program did you receive benefits under? You can choose unemployment, governmental unemployment compensation to which you made contributions, a private unemployment fund, union payments, state employees who are not covered by a state unemployment compensation law, or workers' comp. Let's select workers' comp. Was the payment received under a Workers' Compensation Act or a similar state law? Which part of the payment was based on age, length of service, or prior contributions to a retirement plan? Let's just say part of it was. Did you receive Social Security or equivalent railroad retirement benefits that were reduced because of this workers' comp? Let's say yes. Did you return for light duty? We'll say no. So this payment is partially taxable, and the tax assistant gives a written explanation. So generally, amounts that you received or your survivors as workers' comp for an occupational sickness or injury are fully tax exempt. The part of the payments that you receive based on age, length of service, or prior contributions, that part is taxable as either pension or annuity income. And this would be reported on the pensions and annuities line of your tax return. The part of your workers' comp that reduced your Social Security is considered Social Security. That part may be taxable as well. So let's go back and select a different type of unemployment program. Let's say state unemployment. Did you repay any unemployment compensation? We'll say no. Was federal income tax withheld? We'll say yes. Was it received under a Workers' Comp Act or a similar state law? We'll say no. So this says that the payment you receive for being unemployed is taxable, and you should receive a Form 1099-G showing the amount that was paid to you. You would enter this on the unemployment compensation line on your Schedule 1. So you would also include any federal income tax that was withheld on the correct withholding line when you file your tax return. So let's go through one more type of this reportable unemployment. Let's talk about union payments. Oh, wait. Okay. Yep. So did you repay any unemployment compensation? We'll say no. We'll say federal income tax was withheld. We did not receive this under workers' comp. So any benefits that were paid to you as an unemployed union member from regular union dues are included in income on Schedule 1. But if you contribute to a special union fund and your payments to the fund are not tax deductible, then the unemployment benefits you receive for the fund are includable in your income only to the extent that they exceed your contributions. So in other words, if you had to pay money into a union unemployment account or a fund, if you paid $10,000 over the past several years and then they start paying you that back, the money that you put into the fund if you weren't able to take tax deductions off of your contributions, as long as you're just receiving your money back, it's not taxable. Once you start receiving more money than you put in, the additional money is taxable. So you can go through this depending on your situation and walk through the form just as we did. What I like to advise people are two things. One, any text that you see that's highlighted in blue, which we didn't see a lot of, you can select that text and then it will open up a page, a separate page in your browser that kind of helps you better understand that topic. So in this case, I selected on tax year. As an individual, your tax year is the calendar year unless you maintain records based on a fiscal year. And the IRS defines a fiscal year as any tax year that ends at the end of a month other than December 31st. So the most, probably for most government people, most people understand September 30th is the end of the fiscal year for the federal government and many state governments. Some taxpayers, some companies may use June 30th as the end of a fiscal year. So that would be a fiscal year as any year that ends at the end of a month other than the end of the tax year. So the second thing that I like to point out is that this interactive tax assistant is not legal advice. It's not tax advice. So if you're ever audited, you can't completely defend yourself in an audit simply by telling the IRS examiner that you use the IRS online tool. But what you can do and what you should do is you should print this review screen out right here. You just hit the print button and you can print this out. And then what I would advise is that you go through it line by line to make sure that the answers reflect the truth as you understand it. First of all, if you made a mistake, you're more likely to catch that mistake if you just slow yourself down. And a lot of people find that printing a document and reading a paper document does help them slow down as opposed to just breezing through something on a computer screen. And then the second thing is, if you do make a mistake and you are asked questions by an IRS examiner, you won't avoid any taxes that you should have paid, and you probably won't avoid interest based on that tax that you didn't pay. But there are a lot of penalties that the IRS can impose on taxpayers for a willful disregard of the tax code, accuracy related penalties, just complete disregard or recklessness when filing a tax return. And if you keep this in your records, it shows a level of diligence that you tried your best, that you were trying to be an honest broker. And if there is a discrepancy, you can honestly, discuss with the examiner that it was a mistake. And, this may not necessarily will guarantee or anything, but it may be a reason why you avoid any of the excess penalties for, reckless disregard and negligence and things of that nature. So I always recommend to people, if you're going to rely on this to make decisions, and there's no reason you shouldn't, as long as you take the time to carefully review your answers, that the answers are truthful and correct to the best of your knowledge, and then just keep it as documentation. So that's all we have for this video. There were a couple of forms and schedules mentioned, so we'll put links in the show notes to those particular items. And if you like our articles, please check out our website. Go to teachmepersonalfinance.com. If you have a question about a particular tax form, odds are pretty high that we've written an article about it. Just type in the name of the tax form. For example, Schedule 1. You can type in IRS Schedule 1 and you'll see an article that we've created on Schedule 1. If you like our YouTube videos, please subscribe to our YouTube channel. And if you have any questions or comments, or if there's a video that you'd like to see in an upcoming YouTube video, please hit me up in the comments section. Thank you very much and have a great day.